Andrew Clennell, it's a situation now, I guess, for the new government that great, the economy's growing well still, but there's always a sort of a downside for them at the moment. In this case, interest rates and where they'll go in a decision that we made pretty soon.
Interest rates and inflation are the concerns for this government, not to have things too overheated. I think they should be pretty happy with this result. This isn't a bad result. Don't forget, this is the quarter in which we had the dreadful Omicron summer. There were virtual shutdowns of businesses in Sydney and Melbourne during this period because too many staff were sick and they couldn't stay open. People weren't going out. They were concerned in January in particular about getting the virus. So I think this is a pretty healthy result. It's not this result that gives you the concern. It's the next inflation number. It's the inevitable interest rate rise that we're expecting in June. That is where the concerns are going to come for the government, as is the promise they made to lift wages. How are they going to achieve that? Jim Chalmers was on with Kieran yesterday talking about the employment summit and a white paper. That's in the review territory. That doesn't lift anyone's wage. People are looking to them to lift wages without blowing up the economy. I thought it was interesting yesterday on Ross's show, Warren Hogan, as an economist we respect, saying that they could avoid recession. There's been this bit of a view we might have a recession next year because inflation gets out of control and the interest rates have to clamp on hard. He thought the economy was more resilient than we have been thinking it is, and I think these numbers tend to illustrate that as well.
And on the upside, Ross, of growth is that, you know, the prospect, the worst result is stagflation, where inflation's happening and growth isn't, but at least the growth's continuing for now.
Oh, look, this is true. And the one thing that comes out of this statement today is that the growth is coming from the government sector, so public sector spending is one key, but it's also household sector spending. So in other words, households have not yet lost their confidence, at least not until the end of March, to continue to spend. Now, the question of, as Andrew says, what happens as inflation starts to rise even higher? And of course, you can even see this with fuel prices, which is almost the immediate barometer of, you know, public expectation about spending. You know, when that starts to actually creep into the lifestyles of individuals and families, whether that has an impact. But the key here is if people can maintain jobs, if there is pressure on employment to continue to fall, then that's going to actually at least keep families going. It's when unemployment starts to rise that then the prospect of an economic downturn and, if you like, the recession question into next year becomes a reality. But the soft landing is what everybody wants, and that really is all about the very delicate balance of this increase in interest rates from the Reserve Bank.
And that's the potential downside you were talking about before, Andrew Clennell. For the government and its decisions, it will have to make, you know, one of the calls that it has to make, and it's said already on petrol that it doesn't want to, there are no plans to extend the cut in the excise. But if prices are just as high then, that pressure will build, right? Because otherwise you're jacking up petrol by 20 cents.
This is a real challenge for the budget, the October budget. How do you address cost of living but not blow up the economy through inflation? We had a report in the Australian Financial Review this morning that said Treasury advised against the $8.6 billion stimulus in terms of cost of living, including the petrol excise cut that Scott Morrison and Josh Frydenberg did in the March budget. They said go for one of the measures, not the three measures which included payments to people as well as the petrol excise cut. So how does the government say we're addressing cost of living but we're not overheating the economy? Their argument is through wages, but how they are going to do that is very, very unclear at the moment.